Hello, and welcome to the first episode of the JeaFx podcast. This is going to be a new weekly series where I talk through psychological, technical, and fundamental aspects of trading to help you improve your work. Most of the podcasts will be hosted just by myself, helping you by talking through different topics that come to mind each week. I do plan on getting some special guests on in the future, and I will be getting on some members of my academy who have built their success and are now trading for a living or trading large funded accounts, making consistent income. I also hope to get some guests on from elsewhere, other mentors or other traders that I've met along my journey, and any other special guests. So if you've got any recommendations or you want to reach out and be on the podcast, please do let me know. So being the first episode, it's just going to be me talking today, and I decided I wanted to talk through something that is essential for all traders to have, and that is a good trading system. So the topic of today's podcast is going to be building a trading system. We're going to talk through what a trading system is, how you would make one, and why it is important to have one at all times. So let's get into the podcast. No matter your level of skill or experience in the markets, having a solid system that you can follow is going to be essential for your success. Without a system, you are essentially wildly gambling. You are taking random trades every single time. A system is what allows you to bring concepts together into a set of rules that you would follow on every trade that you take. So first of all, what is a trading system? A trading system is simply a method that you will apply to the charts and apply to the markets for every trade that you take. A system builds the backbone of any trader's career because each day or each week that we come to the markets, we should be applying this trading system in the same way. It gives us a basis to work from and allows us to continually repeat winning processes without actually taking random discretionary trades that don't really make sense to any larger process. You would be surprised how many people do not have a trading system, and I'm sure a lot of you listening don't have one either. You might have a bundle of concepts, for example, supply and demand, or support and resistance, or trend lines, or imbalances, or any of these different concepts. You may be using them outside of the confines of a system, so you are simply applying random concepts to the chart each time you arrive, hoping some line up, and then taking a trade off that. A system actually puts everything into a kind of mechanical process where everything is step by step and you can actually follow out a winning process from start to finish. So let's now talk about the first big benefit of having a trading system. The first reason you're going to need a trading system is to first of all test if your trading actually works. If you don't have everything put into a methodical approach, how do you even know that you can trade? You can't really base your results off one single winning trade because we always have a 50-50 chance as to whether we are going to win a position or not. So if you don't actually have a system that you apply continually, how will you ever know if you have a winning approach to trading or if you are simply getting lucky on these random trades you're taking? So essentially you need a system to even know in the first place whether you are a profitable trader. That is one of the big reasons why it's so important. The second key reason as to why a trading system is important is to stay organized. Many traders will contact me and say, I feel like I've been trading successfully for example, a month, or I've had some good success over the past few weeks, or I really feel now like I know what I'm doing. But then after a bit, this kind of fades away and they fall into a kind of losing cycle where they forget and they fall out of touch with their winning approach and they start to take random trades or poorly defined trades, and then this leads them into another streak of losses. So by not having a trading system, you're never giving yourself something to continually refer back to. You might have a winning streak, but when that winning streak ends and you have nothing to reflect back upon, you can easily fall into a pit of losses that is going to continue gradually climbing. So to stay organized, a trading system is very much needed. It gives you something to reflect upon and something to continually apply. And if you have it written down and you have it marked out and you have that methodical approach prepared, you're not going to make these silly mistakes where you have a winning streak and then turn it into a losing streak and don't know how to get back out of that hole. Now, another big benefit of a trading system is that it helps psychology. If you are firing into trades every day, taking random positions, you are not going to have a good psychology because you're going to constantly be nervous as to whether that trade is going to win or not, because you don't really know whether your system is a winning system or if this random trade that you've taken is going to pay out in your favor. If you actually have a winning system marked down and you've tested it, which obviously we've spoke about just, that's going to give you a big psychological edge, because you're going to know that as long as you keep applying that system day after day and week after week, even if you go through a streak of losses or even if you have some tricky trades, long term you're going to make money. So the psychology side of having a system written down and collected is very, very important. And that's going to boost your psychology a lot, keep you confident, and allow you to hold those winners and cut those losses, knowing that the next win can easily take away the loss. And one of the final key pointers I wanted to talk about of why trading systems is important is because it gives you a baseline to build off of. If you are a new trader and you are just in the early days of kind of building your approach and getting to grips with how you want to approach the markets, if you build a system from the get-go, you have a baseline to build from. Any improvements you then make in the future can just be added onto your system, and you already have that baseline to test from. And you have that confidence that you have a small winning system, you can then refine and improve that as time goes on. So having that baseline to build off, as well as the other aspects like being able to see if your strategy works, being able to stay organized and stay on track and in tune with what wins for you, and having the confidence added, knowing that as long as you keep applying your system long term, you are going to win. All of these things combined make a trading system very important. And that is why I say you need one. So what kind of trading systems exist then? Well, a trading system would refer to anything really, like an algorithm. Think about how an algo trades. That has to have a trading system essentially coded into it. That is just going to continually apply the same system that is coded into it day after day and week after week. Now, not all algos work because they don't have the human element. They can't manage risk as well as humans can. But the idea is that we want to code a system into our minds that we can then continually follow. So most systems and most good, consistent winning systems are going to be very mechanical. My systems are very mechanical myself. I have trades that will essentially form the same setup day after day or week after week. When the setup forms, I execute. If the setup doesn't form, I don't execute. And I know that overall, even if I miss some positions, even if I take some losses on some of the trades that I do execute, this is a winning system long term that's going to give me big, big profits at the end of the month, at the end of the quarter, and at the end of the year. So for me, mechanical systems are the most effective way to trade, but some people do prefer to trade with an element of discretion. Let's break these two things down. Mechanical would be a kind of if this, then that system. So we want to create a kind of go-to setup, and then each time we come to the markets, we would look for that setup. For example, I have a system that I call ALS. This revolves around London Open, and it follows a very specific set of rules. First, I'm looking for a sweep of a range. Then I want to see market structure break in my favor, and then I will buy or sell in alignment with that if that happens. This is a mechanical system because it needs a step-by-step approach to occur for me to actually take a trade. It's trading like a robot where we have to see this if we want to execute. If this does not happen, we will not execute. It's the same thing day after day and week after week. A discretionary system, on the other hand, is more so working with some concepts and finding your own trades and having to break the market down in a discretionary fashion, which essentially means working it out for yourself and then executing. So trades under a discretionary plan are going to be rather different to trades under a mechanical plan. Every trade under a mechanical plan is going to be the same, whereas discretionary systems will have some differences from trade to trade. Whether you trade in a mechanical or discretionary way is going to depend on a few things. First of all, where you learned. If you learn from me, you will be applying rather mechanical systems pretty much all over. If you learn from a lot of other people, you'll be trading with discretion, meaning you'll have to use your mind more and you won't be able to use that mechanical robotic approach. Another thing that it depends on is your personal trading style. A lot of people will learn discretionary approaches, but they can't actually make them work long term, so then they switch to a mechanical style approach. On the other side of that, you might find better results trading discretionary because that just might suit your personality type more. Regardless of whether you go with a more mechanical based or discretionary based system, you still need to have your system marked out and prepared because this is what's going to bring you the best results long term for the reasons previously mentioned. So what are the different aspects of a trading system then? What does a trading system need to include and how do we actually create one? Is it a mystical entity or do we write it down? Or do we plan it out in a document or something else? Well, first of all, a trading system is essentially your method to work. So really, it is just a system that you apply, but it's always good to have it written down or marked down or ready to go at any moment, whether you write it down in a document online or you write it down on pen and paper. If you keep that nearby, that is essentially going to be your trading Bible to follow each time you come to the markets, and you want to apply that religiously. So your trading system needs to be built up of many different factors. You don't need to overcomplicate, you just need to include your processes. But your processes are going to be things like psychology, risk management, technical analysis, and fundamental analysis if you use that. So your trading system needs to clearly define each of these. Treat it like a plan that you'll use each day when you come to the market to actually follow that plan. And all you want to do is make sure you follow as closely to that plan as possible. And if you do that, whether it's a green day or a red day, it's a successful day. So here's an example then. These concepts are going to be totally random, not specifically how I trade. But let's say I wanted to build a system around a market structure approach that I'd learned. Let's say even that I wanted to use indicators, which personally I do not do. But let's just say, for the sake of this, because if you do use indicators, they'll be included as well, that I am going to be trading market structure in line with the RSI indicator and also in line with supply and demand. Okay. So I would build my system something like this. For each trade, I want to risk 1% of my capital. I think 1% is a good baseline, so you could take that on board yourself. If you want to risk less, you can. If you want to risk more, you can, but don't go too much further than 1%. So now that I've clearly defined that every single trade I take will be risking 1%, I then want to give myself some rules. Like, I won't take more than 2 losing trades in a day. And if I take 4 losing trades in a week without any winners, so a 4 losing trade consecutive streak, I will stop trading, realign and re-prepare, do some back testing, and then come back. So these are going to be the risk aspects. We have controlled our risk then down to a daily limit. We control our risk per trade to a manageable limit. And we prepare for the inevitable downswings that will sometimes happen within our system, giving ourselves a rule to stop and cut the damage, backtest and realign, and then come back when we feel ready to do that. So that is the risk area of the trading system. Next of all, and arguably the most important, is going to be my technical and fundamental processes. So if I was this trader using market structure, supply and demand, and the RSI indicator, for example, let's say I don't really use any news, but let's say I want to make sure I'm staying out of the market when there is important economic news coming around, such as CPI data, interest rates, or the NFP, something that could cause crazy volatility in the market that I'm trading at that time. So what I would do for the fundamental area of my trading is say I do not trade using fundamental backing. However, I will stay out around news like the CPI, inflation data, interest rate data, any of these things. So if you mark down that you will not trade through this news, then you have to keep in mind in your plan, day-to-day trading, you need to stay aware of this news and then avoid that. So your plan may include, I will check the financial calendar at the start of each day and make sure I am not trading through high interest news. Now you would move on to your technical processes. So let's say then a hypothetical idea would be, step 1 is to come to the chart and identify the market structure of a market. So if I'm looking at GBP USD, I want to make sure that the market is bullish or bearish. Once I've found this, I want to find supply or demand zones in line with the trend to either buy or sell from. So if we are bullish, I will look for demand zones to buy from. If we are bearish, I will look for supply zones to sell from. After that, I will then look to see if the RSI is oversold or overbought, and if that lined up with one of my supply or demand zones, I will then execute a trade. So now we have a system in place, right? We know how much we're risking per trade. We know that we need to stay aware of the fundamental news. And now we know what our technical process is. We are going to first of all identify the direction of the trend. Then we are going to find good selling or buying points using supply and demand. And then we are going to check the indicator, the RSI, to see if it's oversold or overbought in line with our trades in order to actually get the entry. That's kind of the last entry criteria before we would execute a trade at 1% risk and then let that run. Now, your system should also include exit strategies and entry strategies. So you might be looking at engulfing for your entries, for example. You might like to see the engulfing pattern. Maybe you like to see something else. And your exit strategy should be, next time we hit the next support floor, I'll be getting out, or something like that, whatever it may be that actually gets you out of your positions. So now hopefully you can see how the trading system that we've built kind of comes together and builds that baseline to build off, as we mentioned earlier. We've now got a system where we know how much we're risking, we know how we're going to use fundamentals, We know exactly how we're going to get in and out of our trades. And first things first, what this allows us to do is work out whether this is even a profitable strategy. Because now that we have this step-by-step approach, we can actually backtest this specific approach and see whether it's profitable long term. We could now, for example, backtest 100 trades and see what is our win rate over the 100 trades. Is it 40%, 50%, 60%, whatever. Once we know our win rate, we can then see what's the average risk reward of the winning trade that we've taken during our backtesting. If we saw that the average winner was 3R and the average loser was 1R, then we know that we are going to be making money based on the risk reward, so long as our win-loss ratio is better than 30%. After we've done this backtesting, we then have a solid trading system that we can continually apply, providing it wins. If we find out that the trading system is not a winning system long term, that's fine. We can then refine it. We can then switch it up, add new concepts, remove concepts, try and work out how we can improve the win rate for this system until it is a winning system. Now, hopefully by this point in the podcast, you can tell why it's so important to have one, and that if you don't have one, it's hard to ever know if you're a winning trader. You've got nothing to build off. You've got nothing to test from. You can't really find out whether you are winning or not until you have a methodical system marked down that you can backtest and then, if successful, follow. Now let's assume that this hypothetical system was a success. Now we have the confidence to apply this to the markets because we know that generally it's going to be a winning system over a long enough timescale. This gives us something easy to follow each day, meaning we don't have to sit around melting our brains at the chart. We can just work with that system we've created. And it's also going to give us the confidence to continually apply that, whether the down phases, because if we start to hit losing streaks, we don't have to stress about that. We know that we're going to win long term because the system is being tested and tried. And all in all, make our trading a lot less stressful and a lot more effective. So building a trading system is good for all of these reasons. I've given you a brief input into how to actually build your own system. And hopefully now, as we come close to the end of this podcast, you can see how important it is to build a system and how beneficial it can be to have a winning system in your control. In my opinion, building systems is quite fun. I still dabble around with building new systems now, taking a look into different possible ways to make money. I find it enjoyable to create and then test a system and see if it wins. If it wins long enough, I can start to adopt it into my live trading, and this is where we can start to actually monetize the work that we've put in. Trading systems give me a surefire way to know whether I can make money doing something before I start risking money doing it. If I'm going to start firing trades into a market, I'm first of all going to do it in a testing scenario to work out whether that approach is actually a winning approach. If it's not a winning approach, I'm simply not going to adopt it, because why would I want to give away money when we're here to make money? So the big key pointer of this episode of the podcast is really just to get you thinking about your system. Do you have a system? If you think you do you have it written down? Is it repeatable? Is it something that you can continually apply? And is it actually a winning system? Have you done the testing to know whether or not this is a winning approach to the markets? There's a lot of value and a lot of information you can take from this podcast and apply it into your own work to either refine your systems or build yourself a system if that's not something you've done yet. Remember that having a concrete plan is very important, and if you have that trading plan down, you have a lot more confidence in your work and you're going to see much better results. So I hope you've enjoyed the first episode of the JeaFx podcast. If you have, please subscribe to this on whatever platform you're watching it on. It will be on YouTube first, but it will then soon be onto all the others. There's going to be lots of value coming your way in the form of these small podcast episodes. We'll talk about a lot of psychology, fundamental and technical based areas of trading, and hopefully improve your skills big time. So thank you for listening to this episode, and I look forward to seeing you in the next. If you've enjoyed this podcast, head over to JeaFx.com. You'll be able to find my social links there to all the other free content I have out. There's a free trading course that you can join. You'll find that through my YouTube videos or the link on my Instagram page, which is at JeaFx_. I've helped over 800 students achieve their dreams in trading, many of which have moved on to become funded and achieve their trading goals. If you want to become one of those, head over to JeaFx.com and you can join my trading academy there. Hope you've enjoyed this podcast, and I'll see you in the next episode.